Based on the historical data and forecast, Bitcoin has shown a significant downtrend. The price has consistently been declining from 95,500 to a forecast of 79,700. The RSI indicates oversold conditions on multiple days, particularly around 34.2, suggesting potential for a short-term bounce. However, the overall trend remains bearish, supported by the forecast and recent price action. The Bollinger Bands show that the price is currently trading near the lower band, further reinforcing the bearish sentiment. Therefore, I recommend a short selling strategy with a focus on capitalizing on the downward trend, but with careful risk management. The strategy will be to short Bitcoin at $86,600. The stop loss will be set at $88,400 to protect against a potential short-term bounce, and the initial target price will be $82,900, aligning with the forecast price and the lower Bollinger Band. If the price reaches $82,900, we will reassess the market conditions and consider adjusting the target price downwards to $79,700 based on the forecast. The RSI readings suggest that while oversold, a strong reversal is unlikely given the prevailing bearish trend. This strategy prioritizes riding the downward momentum while incorporating stop-loss mechanisms to limit potential losses. Based on the historical data and forecast, Ethereum has shown a downtrend with increased volatility. The RSI indicates oversold conditions several times, particularly between January 24th and 28th, with readings below 40. The Bollinger Bands show the price frequently touching the lower band, suggesting potential buying opportunities. The forecast for the next week predicts a continuation of the downtrend, with prices ranging from $29.40 to $28.70. Considering these factors, I recommend a contrarian strategy focusing on short-term bounces within the downtrend. My proposed strategy involves buying Ethereum at $2,890 when the RSI is below 40 and the price touches the lower Bollinger Band. The stop loss should be set at $2,870, just below the lower band, to limit potential losses if the downtrend continues. The initial target price is $2,950, aiming to capture a quick profit from a potential bounce. If the price reaches $2,950, we can consider moving the stop loss to break even to protect profits and potentially extend the target price to $3,020 if the RSI shows signs of overbought conditions. This strategy combines RSI and Bollinger Bands to identify high-probability entry points within a defined risk-reward framework, maximizing returns while minimizing potential losses. Based on the historical data and forecast, BNB demonstrates a downtrend with increased volatility. The RSI consistently falls below 60, indicating a weakening upward momentum. The forecast for the next week predicts continued sideways movement around $880 to $890, with a slight downward bias. Considering the support price of $865 and the Bollinger Bands, I recommend a short selling strategy. Entry price should be set at $888, with a stop loss at $899 to limit potential losses if the price unexpectedly rebounds. The initial target price is $865, aligning with the established support level. To optimize returns, I propose a tiered target approach. If the price reaches $865, take partial profits and move the stop loss down to the entry price of $888. This secures gains and protects against a potential reversal. If the price continues to decline, the next target price is $853, corresponding to the lower Bollinger Band. This strategy combines RSI, Bollinger Bands, and support levels to capitalize on the current downtrend while managing risk through strategic stop-loss placement and profit-taking. The portfolio will be 60% short BNB, 30% in cash, and 10% in a stablecoin like USDC to hedge against volatility. Based on the historical data and forecast, XRP has shown a downtrend with increased volatility. The RSI consistently dips below 50, reaching as low as 37.4, indicating oversold conditions. The forecast predicts a continuation of this downward trend, with prices fluctuating between $1.82 and $1.88. Considering the oversold RSI and the downward forecast, I recommend a contrarian strategy aiming to capitalize on potential short-term bounces. We will implement a strategy based on the RSI, Bollinger Bands, and support and resistance levels. Our strategy involves a phased approach. First, we will enter a long position at $1.82 when the RSI is below 40 and the price touches the bottom of the Bollinger Bands. The stop loss will be set at $1.77, just below the lower Bollinger Band, to limit potential losses. The initial target price will be $1.86, coinciding with the historical resistance level. If the price reaches $1.86, we will move the stop loss to the entry price of $1.82. The final target price will be $1.9, representing a more significant potential gain. This strategy combines technical indicators with support and resistance levels to maximize potential returns while managing risk effectively. Based on the historical data and forecast, Solana exhibits a downtrend with significant volatility. The RSI consistently dips below 50, reaching oversold levels below 30, indicating potential buying opportunities. The forecast predicts a continued decline, with prices dropping to $117. Considering these factors, I recommend a contrarian strategy capitalizing on short-term bounces. We will implement a portfolio combining RSI, Bollinger Bands, and support/resistance levels. The strategy will involve entering long positions when the RSI falls below 30 and the price touches the support level of $105. The entry price will be $105. A stop loss will be placed just below the support at $95 to limit potential losses. The initial target price will be the nearest resistance level at $119, offering a quick profit. If the price breaks through $119, we will extend the target to $127, based on recent resistance levels. If the RSI reaches 80 or the price touches the upper Bollinger Band, we will exit the position to avoid potential reversals. This dynamic approach allows us to navigate the volatile market and maximize returns while minimizing risk. Based on the historical data and forecast, TRON has been showing a downtrend with increasing volatility. The RSI has been fluctuating between 45 and 73, indicating periods of both overbought and oversold conditions. The Bollinger Bands have widened, suggesting increased market uncertainty. Considering the recent price action and the forecast for the next week, I recommend a cautious approach with a focus on short-term trading opportunities. My proposed strategy is a combination of RSI and Bollinger Band signals. We will initiate a long position when the RSI dips below 30, indicating an oversold condition, and the price touches the support level of $0.294. The entry price will be $0.294. A stop-loss order will be placed just below the support level at $0.288 to limit potential losses. The target price will be set at the middle of the Bollinger Bands, which is $0.296, aiming for a quick profit. If the price breaks below $0.288, the position should be closed immediately. If the price reaches $0.296, consider taking profit and re-evaluating the market conditions. This strategy aims to capitalize on short-term bounces while mitigating risk with tight stop-loss orders. Based on the historical data and forecast, Dogecoin has shown a downtrend from January 16, 2026, to January 29, 2026, with the price fluctuating between a support of $0.111 and a resistance of $0.122. The RSI consistently remained below 50, indicating a bearish momentum, and recently dipped below 40, suggesting an oversold condition. The Bollinger Bands have been narrowing, which can signal increased volatility, and the forecast predicts a continuation of the downtrend, with prices hovering around $0.117 to $0.122. Therefore, I recommend a short position strategy, capitalizing on the anticipated downward movement. The entry price for this short position should be $0.122, coinciding with the resistance level and the beginning of the forecast period. A stop loss should be placed at $0.124, just above the upper Bollinger Band to protect against unexpected upward spikes. The initial target price is $0.117, aligning with the forecast low. If the price reaches $0.117, consider moving the stop loss to break even to protect profits and potentially ride further downward momentum. If the price continues to fall below $0.117, a secondary target price of $0.111, the established support level, can be considered. This strategy combines technical indicators, price action, and forecast data for a high-probability short trade. Based on the historical data and forecast, Cardano exhibits a downtrend with increasing volatility. The RSI consistently fluctuates below 50, indicating a weakening momentum, and the forecast predicts a continued decline. Considering these factors, I recommend a short selling strategy. Our entry price will be $0.349, capitalizing on the current downward trend. To mitigate risk, we'll set a stop loss at $0.353, just above the forecast high for February 1, 2026. The initial target price is $0.337, aligning with the forecast low for February 5, 2026. To refine this strategy, we'll incorporate the Bollinger Bands. The price consistently trading near the lower band suggests further downside potential. If the price breaks above the upper band, signaling a potential reversal, we'll adjust our strategy. If the RSI drops below 20, indicating an oversold condition, we'll consider covering our short position. Conversely, if the RSI reaches 80, suggesting an overbought condition, we'll tighten our stop loss. This dynamic approach, combining trend analysis, RSI, and Bollinger Bands, will maximize returns while managing risk effectively. Based on the historical data and forecast, Bitcoin Cash shows a downtrend with recent volatility. The RSI consistently remains below 60, indicating a generally weak momentum. The forecast for the next week predicts a continued decline, with prices ranging from $583 to $563. Considering the support price of $536 and the Bollinger Bands, I propose a short selling strategy targeting a gradual decline. The entry price for this strategy will be $583, with a stop loss set at $571 to limit potential losses if the price unexpectedly rebounds. The initial target price will be $563, aligning with the forecast low. To refine the strategy, I will incorporate RSI signals. When the RSI dips below 30, indicating an oversold condition, a partial buy position can be considered at $566 with a stop loss at $563 and a target price of $571. Conversely, if the RSI reaches 70, suggesting an overbought condition, a short position can be initiated at $577 with a stop loss at $573 and a target price of $566. This blended approach, combining trend following with RSI-based tactical adjustments, aims to maximize returns while managing risk effectively. Based on the historical data and forecast, Wrapped Beacon ETH has been in a downtrend since January 16, 2026. The price has consistently tested the support level of $3,060 and has failed to break above the resistance of $3,150. The RSI has spent considerable time in the oversold territory, indicating potential for a rebound. The forecast for the next 2 weeks suggests a continued downward pressure, with prices ranging from $3,200 to $3,120. Considering these factors, I recommend a contrarian strategy focusing on short-term opportunities within this downtrend. My proposed strategy involves a combination of RSI and Bollinger Band signals. When the RSI dips below $30, indicating a strong oversold condition, we will initiate a long position at $3,120. The stop loss will be set just below the recent low of $3,060, at $3,040, to limit potential losses. The target price will be the resistance level of $3,150. Conversely, when the RSI reaches above $70, indicating an overbought condition, we will initiate a short position at $3,160. The stop loss will be set just above the recent high of $3,200, at $3,220. The target price will be the support level of $3,060. This combined approach aims to capitalize on short-term price fluctuations while managing risk effectively. Based on the historical data and forecast, SKY shows a slight upward trend. The RSI values fluctuate around the 50 mark, indicating neither strong overbought nor oversold conditions. However, the forecast prices consistently remain above 0.066, suggesting a continuation of this upward momentum. The price has been trading within the Bollinger Bands, and the forecast indicates that it will likely remain within these bands. Considering these factors, I recommend a long position with a conservative approach. Entry price will be $0.0668, with a stop loss set at $0.064. The initial target price will be $0.0676, aiming to capture a portion of the forecasted upward movement. To refine the strategy, I will incorporate the RSI and Bollinger Bands signals. When the RSI dips below 30, indicating an oversold condition, we will enter a long position. Conversely, when the RSI reaches 70 or above, signaling an overbought condition, we will consider exiting the position or taking profits. The Bollinger Bands will serve as dynamic support and resistance levels. If the price touches the lower band, it might be a buying opportunity, and if it touches the upper band, it might be a selling opportunity. Combining these signals, the entry price will be $0.0668, the stop loss at $0.064, and the target price at $0.0676. This portfolio combines the trend analysis, RSI signals, and Bollinger Bands to maximize returns while managing risk. Based on the historical data and forecast, DoubleZero has been exhibiting volatility with periods of consolidation and minor upward trends. The RSI consistently fluctuates around the 50 mark, indicating neither strong bullish nor bearish momentum. The Bollinger Bands show that the price has recently touched the upper band, suggesting a potential for a pullback. The support price of $0.119 and the resistance price of $0.126 provide clear boundaries for price action. Given these observations, I recommend a strategy that combines RSI signals with Bollinger Bands confirmation, with a focus on capitalizing on short-term price corrections. My proposed strategy involves a long position when the RSI dips below 45 and the price touches the lower Bollinger Band. The entry price will be $0.118. A stop-loss order should be placed just below the support level at $0.117 to limit potential losses. The target price will be set at $0.128, near the resistance level, aiming for a profit of 10%. This strategy aims to take advantage of temporary price dips while mitigating risk through a well-defined stop-loss and a realistic target price. This approach balances potential gains with risk management, aligning with a high-returns investment philosophy. Based on the historical data and forecast, Maple Finance shows a generally sideways trend with increased volatility. The RSI indicates periods of oversold and overbought conditions, currently hovering around the mid-range. The Bollinger Bands show price fluctuating within a range, with the bottom band approaching the support level of $0.308. Given the forecast prices increasing from $0.346 to $0.364, and the RSI showing signs of recovery, I recommend a long position. The entry price for this trade should be $0.346, coinciding with the first day of the forecast period. The stop loss should be placed just below the support level at $0.307 to limit potential losses. The first target price is $0.358, aligning with the forecast price and the upper end of the recent trading range. A secondary target price can be set at $0.364, matching the final forecast price. This strategy combines the bullish forecast with RSI and Bollinger Bands indicators, aiming for a high return, moderate risk position. Based on the historical data and forecast, just shows a mixed trend with periods of consolidation and upward movement. The RSI values fluctuate between 45.3 and 65.7, indicating both oversold and overbought conditions. The Bollinger Bands have been widening recently, suggesting increased volatility. Considering the support price of $0.0417 and the resistance of $0.0447, the price is currently trading within a range. The forecast for the next week indicates a slight upward trend, with prices hovering around $0.0445 to $0.0451. Therefore, a combined strategy utilizing RSI, Bollinger Bands, and support/resistance levels will be implemented. The strategy will involve a long position entry at $0.0439, coinciding with a slight dip in the forecast and a potential bounce from the lower Bollinger Band. The stop loss will be set at $0.0417, just below the support level, to limit potential losses. The initial target price will be $0.0451, aligning with the upper Bollinger Band and the upper end of the forecast range. If the price reaches $0.0451, a trailing stop loss will be implemented at $0.044 to secure profits while allowing for further upside potential. This combined approach leverages the momentum from the forecast, the volatility indicated by the Bollinger Bands, and the defined risk management provided by the support and resistance levels. Based on the historical data and forecast, PAX Gold demonstrates a strong uptrend. The price has consistently moved upwards, breaking through key resistance levels. The RSI consistently remains above 66, frequently entering overbought territory above 80, indicating strong buying momentum. The Bollinger Bands have widened, suggesting increased volatility and potential for further price movement. The forecast prices project continued upward momentum, reaching $5,930. Therefore, I recommend a long position strategy focusing on capitalizing on this upward trend. My strategy involves entering a long position at $5,420. Given the strong uptrend and potential for further gains, the initial target price will be $5,850, aiming to capture a significant portion of the projected upward movement. To mitigate risk, a stop-loss order will be placed at $5,300, slightly below the recent low and the lower Bollinger Band. This stop-loss provides a buffer against unexpected price reversals while limiting potential losses. As the price approaches the $5,850 target, consider adjusting the stop-loss upwards to protect profits and potentially ride further gains if the uptrend continues. This strategy combines RSI signals, Bollinger Band analysis, and forecast data to maximize potential returns while managing risk effectively. Based on the historical data and forecast, Axie Infinity shows an overall upward trend. The RSI consistently fluctuates above 58, indicating bullish momentum, with brief periods of oversold conditions. The Bollinger Bands suggest volatility, with prices frequently touching the upper band, confirming the upward trajectory. The forecast for the next week predicts continued growth, with prices ranging from $2.68 to $2.89. Therefore, I recommend a long position strategy focusing on capitalizing on pullbacks to support levels. Specifically, I suggest entering a long position at $2.65 when the price retraces to the support level. Set a stop-loss order at $2.05, just below the support, to limit potential losses. The initial target price should be $2.89, aligning with the forecast high for the week. If the price continues to rise, consider moving the stop-loss to break even to protect profits. This strategy combines technical indicators and price forecasts to maximize returns while managing risk effectively. Based on the historical data and forecast, MORPHO shows a fluctuating trend with periods of consolidation and minor upward movement. The RSI consistently fluctuates around the 50 mark, indicating neither strong bullish nor bearish momentum. The Bollinger Bands show that the price is currently near the middle band, suggesting a period of low volatility. Considering the support price of 1.15 and the resistance price of 1.25, a conservative strategy is warranted. I recommend a long position entry at $1.19, coinciding with the forecast price on February 1, 2026. Place a stop-loss order at $1.14, just below the recent low and support level, to limit potential losses. The target price for this trade will be $1.25, aligning with the resistance level. We will utilize the RSI and Bollinger Bands to refine this strategy. If the RSI crosses above 70, indicating overbought conditions, we will consider taking profits or tightening the stop-loss. Conversely, if the price touches the bottom of the Bollinger Bands, it may signal a potential reversal, prompting us to adjust the strategy accordingly. This approach combines trend analysis, support and resistance levels, and technical indicators to maximize potential returns while minimizing risk. Based on the historical data and forecast, TRON has been showing a downtrend with increasing volatility. The RSI has been fluctuating between 45 and 73, indicating periods of both overbought and oversold conditions. The Bollinger Bands have widened, suggesting increased market uncertainty. Considering the recent price action and the forecast for the next week, I recommend a cautious approach with a focus on short-term trading opportunities. My proposed strategy is a combination of RSI and Bollinger Band signals. We will initiate a long position when the RSI dips below 30, indicating an oversold condition, and the price touches the support level of $0.294. The entry price will be $0.294. A stop-loss order will be placed just below the support level at $0.288 to limit potential losses. The target price will be set at the middle of the Bollinger Bands, which is $0.296, aiming for a quick profit. If the price breaks below $0.288, the position should be closed immediately. If the price reaches $0.296, consider taking profit and re-evaluating the market conditions. This strategy aims to capitalize on short-term bounces while mitigating risk with tight stop-loss orders. Based on the historical data and forecast, SUN token demonstrates a declining trend. The forecast for the next week indicates a continuous downward movement, with prices ranging from $0.0188 to $0.0174. The support price remains consistently at $0.0188, suggesting a strong floor for the price. The RSI values have been consistently below 50, indicating a bearish momentum, with a recent dip to 27.8, signaling an oversold condition. Considering the declining trend, the forecast, and the oversold RSI, I recommend a short selling strategy. The strategy involves entering a short position at $0.0188, coinciding with the support level and the beginning of the forecast period. A stop-loss should be set at $0.0195, slightly above the upper Bollinger Band to avoid being prematurely stopped out by short-term fluctuations. The initial target price is $0.0174, aligning with the lowest forecast price. If the price action continues to decline, a second target can be set at $0.017. This strategy combines technical indicators like RSI and Bollinger Bands with the forecast data and support levels to maximize potential returns while managing risk effectively. Based on the historical data and forecast, LayerZero shows a generally upward trend with recent volatility. The RSI consistently above 70 indicates overbought conditions, suggesting a potential pullback is possible. However, the forecast for the next week predicts continued price increases, reaching $2.37. Considering the support level at $1.9 and resistance at $2.43, I recommend a strategy combining RSI and Bollinger Bands for optimal returns. We will initiate a long position when the price touches the lower band of the Bollinger Bands, indicating a potential oversold condition. Specifically, on February 5, 2026 Thursday, the forecast price is $2.29, and the bottom of the Bollinger Bands is $1.82. We will enter a long position at $1.83. The stop-loss will be set just below the support level at $1.88 to protect against a potential downward reversal. The initial target price will be the resistance level at $2.43, aiming for a significant profit. If the price reaches $2.43, we will move the stop-loss to the entry price of $1.83 to lock in profits and allow for further upside potential. This combined strategy leverages both momentum and volatility indicators to maximize returns while managing risk effectively.